You can't do that anymore. With the new tightening up of the legislation within the budget, one transgression may result in you losing your growth certificate. And if you go back to turning over 5 million a year, that could be £1 million out of your cash flow.
This week we thought we'd talk about the budget that was held at the end of November. Of course, our practice, whilst it's not overly reliant, we have a lot of clients who are in the construction industry. And we know that construction is asset heavy, whether it be scaffolding, plant, excavators, whatever it might be. I think because there are changes in the capital allowances regime, it's important to have that planned as well. So we know that the main rate of capital allowances claim has dropped from 18% down to 14%, but there's a new first year allowance, which I think is probably going to impact mainly on sole traders rather than companies. But you still got the full expense in annual investment allowance. I think still stands at, is it $1 million?
I think that's still $1 million.
Yeah.
We've got some clients who, they can spend 150, 250 grand on a new excavator.
Yeah.
And, we've got a client who's got 3 of those, and if something goes wrong and they need to replace 3 in a year, they are pushing on for the full expensing. So, like I said, it go back to what you said about us working with clients, and it's having those conversations to say, okay, well, we are going to invest. Okay, well, that's great. Tax advantages of it are this. But sometimes ultimately it comes down, does the business need that new piece of equipment?
Never let the tax tail wag the dog.
100%. Absolutely.
I'll probably have that on my gravestone. I've said it that many times. If you don't need the piece of kit, don't get it.
Don't get it.
Yeah.
If you've won a contract that you need that piece of kit for, and you are currently spending thousands and thousands a month hiring in a piece of equipment, then yes, go for it.
So we had this conversation, a relatively new client to the practice, and we did some management accounts for the quarter. So it was a 9 months to the end of September. Year ends December. It gave us the opportunity in those 3 months to go, okay, this is what we're forecasting the year end's going to be. What do we need to do? And their strategy has become, right, we're spending £15,000 a month on plant hire. We need to cut that, and by buying equipment, we can, 1, reduce our corporation tax liability in the current year, and 2, reduce our hire bill. So they can still finance that by obtaining asset finance through the likes of Swoop, who we've talked about on this podcast before. Again, open conversations. Yeah. Plan before the year, and there's no point, and like you said before, Katie, no point saying it after the year end.
I wouldn't say it's too late. It's never too late to have the conversation anyway, but it can be too late for a client when you're discussing something with them that they could have done in the previous year.
I agree, Katie, and the way that James Scott has changed over the last 4 or 5 years to working with clients on a monthly, quarterly basis, producing the accounts, being an extension of being their finance department, we've got a finger on the pulses of businesses. So, like Matthew says, in these quarterly management meetings, we can bring up the fact that the hire for equipment has gone on, and Katie's done an analysis on it, and we can see you're hiring a 3-ton digger every single week, and you've been doing this for the last 6 months. Is it worth you looking at investing in a 3-ton digger? Yeah. And they might say, oh, well, the contract is finished now, I've got no use for it, which is fine. Or they say, well, actually, the projects that we've got coming up, we're going to need this 3-ton digger. Then it comes to, like Matthew said, don't let the tax wag the tail of the dog. And it's, well, we need for the business, we need to invest in the business. And by that, we can say, okay, right, well, the new rule, what's coming with the budget, it's X, Y, Z. So go from there. It all comes down to planning.
But there are tax-saving opportunities.
Absolutely,
by planning your business correctly.
Correct.
Yeah.
And we're not going to tell clients to spend money if they don't need to.
No,
absolutely not.
Buy a digger.
Absolutely not. Although, Peter, I've got certain clients I could probably name will go and buy the digger anyway, just because.
Because they like diggers.
Because they like the look of them.
Yes, the last ones got dirty.
Yeah, the last digger's not. I need a new shiny digger to look at. I need a new toy to play with.
Go to Smith's. Use loads in there. cheaper.
That might be something. I might actually send that to a client. Say, don't buy another digger this year. Here's one from Smiths.
Again, within construction, CIS is a huge area. We see clients with a lot of subcontractors. They're deducting tax from them. Or similarly, they may have tax deducted from their invoices, or they might have a gross payment certificate. And I think that what we've seen in the last budget is a huge tightening up of the compliance around that. And the powers that the Inland Revenue now got to remove your gross payment certificate have increased. From April, I think they've basically got a right, if they suspect fraud, to remove your gross payment certificate immediately.
Yeah, well, I think this has been a continuation of a tightening up of the construction industry and the CS market that the government have been on for the last, again, successive governments have been on for the last few years. You know, it follows on the back of domestic reverse charge to remove the VAT from most of the construction industry, apart from the end user. And it's just another tightening up, because I think the government see this as an area of non-compliance and where there are rogue traders or rogue operators within the industry.
Yeah, I think I agree with that, but I also think that it's non-compliance due to the subcontractor not being aware and not understanding.
Yeah.
If you've got a subcontractor that moves week to week from to different jobs, some of them, and I've had it before, when I've had to ring them and say, you're not verified on the system, they're going to have to take 30% off you. Here's the number, you need to ring HMRC, get yourself set up. Well, I am, because Joe Bloggs last week took 20% off me, but they've not verified them through the system, but they just assume that they did it, so I must be registered.
I do think there's a lack of understanding in the construction industry. Maybe in the smaller businesses, probably the larger businesses are better at this.
I would say a bit 50-50. I can remember having to deal with a larger business, a massive business who works on national infrastructure, and we had to tell them they were doing the CIS wrong with the domestic reverse charge VAT. So we had to tell them, and at first they didn't believe us, and they've been doing it wrong for months and months, and we kept telling them they were doing it, and eventually they said, "Oh yes, apologies, we were doing it wrong." So I would suggest it's not just the small. I think there's a lack of understanding across the whole construction industry, and hence why the government are really, really trying to tighten it up. And I suppose that they're using a sledgehammer to crack a nut to get everybody in line.
I think it links with systems though as well, because I know in the past, years ago, before we used Xero, or any CIS that we dealt with at work was done on Excel. Sometimes, I'm not saying that we assumed that somebody was CIS registered, but you could assume that there was if the client had sent you their list of gross, net, deduction. If we just filed that through the HMRC portal, you didn't get a verification number through the HMRC then, like 10 years ago.
Yeah.
It was just assumed that whoever, Brendan Fitzpatrick, was CIS registered, until you get a letter from the HMRC 6 months later saying that you've not had 20% deducted off you.
So our adoption of technology
That's been
has helped our clients become more compliant.
Yes.
Clients
Absolutely.
become more compliant.
And it goes the other way as well, because I've had it before.
You like a bit of alliteration.
Where we've had, and the company's still a client now, but he went from being a sole trader under CIS to still working for the same customers, end users if you like, setting up limited, but the end users not re-verifying them under the limited company. It took 3 years to get the CIS refund back. Do you remember?
Yeah, I do. Yeah. Do you think that this tightening up and this compliance, whilst I think it's necessary, is a reaction from, I don't know, maybe 10 years ago the government tried to effectively not outlaw construction or subcontractors, tried to drive everybody into an employment relationship, and they were supposed to, and they failed on many occasions to get this through the courts because they were challenged so often.
Quite possibly, but I think also it's a fallout for big things like Carillion going bump.
Yeah,
years and years ago, and there was another massive one recently who had large government contracts who went bump as well. So I think the VAT side of that was part of we're going to put that on the top company, so we're going to put the VAT out, and then the CIS tax. I think ideally they want more people under the CIS tax and less people on the growth certificates because they're getting the money on a monthly basis.
So a cash flow benefit.
It's a cash flow benefit. So it is more compliance for companies. So the growth certificate, a lot of our clients cherish the growth certificate because it makes them easier for them and it helps their cash flow. Because as we know, with CIS rebates from their HMRC, they take months and months and months and months.
Yeah.
I mean, I know that you had a client that was due in excess of $500,000.
That's right, yes.
And the revenue was taking 9 to 12 months to repay it.
I think the revenue staff went on strike about this time last year, and they didn't handle it and then didn't process any claims. And so they ended up with such a large backlog that it took another 6-7 months after the tax year end to be able to repay it. And I think we actually had to look at financing operations for the client, financing options for the client, because it had the potential to send them under because they couldn't pay the bills.
It's a big hole in the cash flow. It's a massive hole in the cash flow. So I think, back to you saying them tightening up on the compliance, we understand that there are rogue traders and rogue operators within the construction industry, which is the VAT fraud and the construction fraud, which, the accountancy press, you hear it all the time. I think so from our perspective for our clients, it's the fact that we're technology driven.
Yeah.
It's going to allow us to
It's
keep
not
on
the
top
only
of
area
it.
that they're cracking down on anyway, because I think we've mentioned it before that the HMRC anyway as a whole they've employed however many more members of staff too.
Compliance officers,
Yeah.
yes. Yeah.
Perhaps because they got rid of them during lockdown, COVID, whatever, and then they think, actually, we could do with a team of them again.
Well, I suppose, from
It's all done online now as well, isn't it?
Yes.
from our perspective, that's a good thing.
Yeah, it is.
Because it means that our clients who are operating properly and compliant, when they're coming up against and they lose a job on price to someone who's operating without the realms, if those operators are targeted and they disappear, then it's not, our client has got the opportunity to win more work.
I think if you were going to advise a company that say it's turnover £5 million turnover construction company, so reasonable size, it's going to have a lot of subcontractors on the books. Depends on the work they're doing. It could be as many as 50, 60 subcontractors. So it's about the onboarding, isn't it? It's about making sure that when you're taking on a subcontractor, it's about onboarding and what I guess you call them the red flag controls.
Yeah.
Verification.
The same as what you'd do if you was employing somebody, you'd have to get all that information to put them on the payroll.
Contracts.
Yeah.
Yeah.
100%.
So making sure that you are, as a business, are compliant and not vulnerable to the increased compliance that's
I
being
get
put on
it.
us.
It's normal. Okay, we've had Joe. He's been working with us for years, and we've got his verification number, and he's all sorted. But we're desperate to get this job over the line, and he brings Billy and Freddie from the pub, and he says, "I've known them for years. They're all CIS. It's absolutely fine." And then we run them and we pay them, and then all of a sudden, no,
I think the trouble is
CIS.
sometimes the business owner has paid I'm going to do this, inverted brackets, subcontractor.
Works really well
before
on a
they've even sent
podcast,
us
though.
any information
Correct.
through, of which that person's moved on to somebody else, and we then say, actually,
That's
they're
the
not
thing.
CIS registered.
Yeah, so it's us been communicating with our clients to say we can't do that anymore. With the new tightening up of the legislation within the budget, one transgression may result in you losing your growth certificate. And if you go back to turning over $5 million a year, that could be £1 million out of your cash flow.
And it's not just about losing your gross payment certificate either. There are penalties, so they can assess any tax loss, and they can charge 30% penalties.
Which is a lot.
Which, if you've got it wrong, it can be a lot of money. And also, I think they can stop you reapplying for up to 5 years. They can bar you from reapplying for a gross payment certificate. So it can really hinder the company's progress if you get this wrong.
And I would take it even further and say if you are turning over $5 million a year in construction, you are dealing with probably big boys in terms of your Balfour Beatties, your Wiggets, maybe locally, etc., and maybe you're applying to get on contracts for councils. If you are not growth certificate, you will not get those accreditation.
So it's the difference between success and failure.
Yeah,
100%.
it can have a knock-on effect on other.
So compliance is absolutely key with the revenue tightening up on this.
Yeah, so I'll make sure you speak to your accountant and get it right first time.
Yeah, listen, even if you're not dealing with us, make sure you're speaking to your accountant on a regular basis, and you've got your systems in place. If your systems aren't in place, come and see us, and we'll sort you out.
The Ledger Lounge is brought to you by James Scott Accountants in Oldham, Greater Manchester. Please like, rate and subscribe wherever you listen to the show. To find out how James Scott can help you build a better business, visit jamesscott.com. This podcast is a QPod production. Visit kupod.co.uk for more information.